Good morning to all traders and welcome to this Tuesday's Marketing Insights video. It is the 15th of December today. Yesterday, Monday, the markets reacted positively, opened over positively to the fact that the first batch of Pfizer vaccines have arrived in the US and they're going to start being officially used. However, a little later in the session, we have had some news around the fiscal stimulus deal. Indeed, hopeful that the deal is going to be reached, maybe even this week or as soon as today or tomorrow, who knows. But the compromise delivered presented by a bipartisan group didn't really sit well with investors because the compromise worth of 908 billion last week was reduced down to $748 billion. So for that reason, we saw markets actually taking a punch at a later stage. And in addition, was also news from London that there is a new mutation in the coronavirus variation that is fast spreading, and this is likely to trigger more stricter lockdowns as we have seen in Germany, but also now in London and perhaps even in the US. In the UK, we had some optimistic headlines coming through again. It seems like now only the fisheries issue is on the table, is the one that is a stumbling block. We are going to have, of course, to wait, hold our breaths and see how this is going to pan out between the EU and the UK in order to have some medium to long-term ideas coming into place. But for now, we can only talk short term. I want to start with the index today. Then I'm going to have a quick look at the S&P and the FTSE. Last week we saw this move actually coming down, we suggested. We've done the 90.63, 62, right? We still haven't reached the 90. We are just off 90 for like 40 points. This is a good confluence level, the 100 Fibonacci, and also the 161.8 Fibonacci of 1 and 2. And it seems to suggest two different scenarios. We're going to go lower to complete wave 5 and then go up for wave 4 and then 5. Or we're going to move lower and complete wave 3 instead, okay, here, which would suggest that this is 1, 2, 3, 4, and 5. That would be in, of course, for 3, right? So in this scenario, the downside could take us down to 89.76 or even lower before we start correcting higher for wave 4. Okay, and then I would be expecting another move to the downside to actually finish this bearish sequence. A signal on the MACD looks quite promising for a potential pullback up to at least the 91 or so, perhaps even up to the 92 or so. But I believe we're going to see a fresh low before this comes into place. Now, when it comes to the S&P, last week we talked about this potentially becoming a triangle, well, an ascending triangle with wave B marked down here. I'm still expecting a 5-wave move to the upside. And I'm thinking that the 4K is a very good confluence level. Is the 161 Fibonacci extension of waves 1 and 2, because the 100 brings us to around 3 and the 161 to around 4K, so I'm looking at this Fibonacci extension between 3 or 4 as well, which is the 100 Fibonacci over here, which makes me think, going to see wave 1 coming to 37.10, then wave 3 to 38.40, wave 5 to 4K or something like that. It could be a variation here in wave 3 because this is the impulse. It's expected to move higher, and then we can easily get a different wave 5 over here, smaller. Signal on the MACD, it's not that strong in my opinion. I think we're going to get another move to the upside, okay, at least for the short term, in order to get some sort of validation in the indicators. The other scenario that we looked over the past few weeks and still remains in place is that this is a ABC, ABC, and 1, 2, 3, 4, and 5. We haven't done wave B yet, so we could still get to 38, 49, 50, and still consider this as a running flat, okay? Because wave 4 would be down here in this scenario, and then we've got 1, 2, 3, 4, and 5, something like this, okay? Now, for the FTSE, we really called a very nice opportunity in wave 4 last week. I looked at this a little bit further today, and I believe due to this structure over here, right, and this move to the upside, this is wave 1 and 2. I placed wave 3 here instead of wave 5. So I'm expecting another move to the downside and then another move to the upside to take out wave 4 and then go all the way down to minor wave 5, right? We do see signals of the MACD and RSI. Indeed, that's why I believe we're going to get wave 4 and then 5. And I do believe we're going to get 4 and not a correction down, right? An impulse down, because it could be an impulse to the downside, but due to the length of wave 1 over here, yeah, I don't think that wave 3 would be only particularly, it looks like all the waves are identical in terms of the range. So I don't quite like this. I would prefer, since this is wave 1, to have a longer wave 3, which is here, which gives me 1, 2, 3, 4, and 5, yeah. And then we get a 4, and it could be a flat since wave 2 is very short and very narrow, and then move all the way up, okay? In case, of course, we see prices moving below the 62.42, then the potential for this to reverse and go all the way down would be high. It would be even higher when we cross below the 59.35 and then 58.56. Okay, in case we break below that level, then this is likely to lead to the 54.80 and then of course to fresh lows. That will be all for the day. Thank you for watching, and we'll speak again tomorrow.